Hey everyone, welcome back to the Mark Loeffler Experience. Today we're going to go through the difference and the benefits of either using a variable rate mortgage or a fixed rate mortgage. And I'm going to tell you what I do at the end of this video, so obviously make sure you stay tuned and let me know if you disagree or agree. By the way, I am not a mortgage broker. I'm a real estate agent who runs a real estate team, and we work with a lot of investors in the Hamilton, Burlington, St. Catharines area. So if you're looking out in that area, or we do have residential business there as well through Oakville, Burlington, and those areas. So again, if you're looking to buy a home or sell a home or invest in real estate, please reach out to us. Hit us up on Instagram. Make sure you follow us there. We're posting almost daily. So again, variable versus fixed. This is probably one of the biggest decisions a homeowner or investor will make as opposed to actually selecting the home they're going to buy, because it's going to affect you for many years to come. This decision will save you or cost you tens of thousands of dollars. If not, like some of these mortgages now, it's going to be hundreds of thousands of dollars. Coronavirus has thrown us all for a little bit of a loop as well. We know that even with like fixed rate, well, actually the last couple of months, fixed rate mortgages have gone up a little bit. You know, we're going to go through all the evidence. We're going to see what makes sense. You watching this video, hopefully I'm helping you save tens of thousands, if not hundreds of thousands of dollars, because that's what this channel is all about. So if that's what you're all about, definitely like and subscribe, share this with your friends. So fixed rate, you lock your rate in place for a period of time. Usually the term most people are taking are 3 to 5 years. Rate is typically a bit higher, but provides a stable, consistent monthly payment for whatever that term is. One of the big downsides to that is if you break the mortgage, typically what you are paying is what's called an interest rate differential penalty to break that mortgage. And that can sometimes be 10, 15, 20,000 more than, well, it could be even more than that, right? So this is what, I mean, you go to the Reddit forums and you talk about mortgage penalties, it's all over there about how much people are paying to break their mortgage. And there's really nothing you can do. If you want to refinance or sell your property or do anything that's going to break that mortgage, you're going to pay that. And the banks make big money with this. So let me just ask you, do you want to pay your bank more or less? Just putting that out there. And it's not possible to switch from a fixed rate to a variable without breaking the mortgage and paying that penalty. So variable, obviously the rate floats and it changes over time. It is tied to the Bank of Canada prime rate. Okay, so the rate is determined using a discount off the prime rate, which right now the prime rate is 2.45%, and you are seeing prime minus 1.2. You are seeing like prime minus 1.5 in some areas. And you just got to be careful with those ones, is that sometimes they have penalties. If you are going to refinance, there's going to be a higher penalty if you refinance outside of that organization. So if you have it with a certain bank and you try to refinance with a bank outside of that, you're going to pay a higher penalty than typical with a variable rate mortgage. So you just want to be sure of that. So when you are going and checking these products out, that you're making sure that you only have a 3-month interest rate penalty to break any mortgage. All right. So typically the variable rate is lower than fixed, but it also can float higher for periods of time, especially if you're going to take a 5-year fixed rate mortgage. You know, it can definitely go above what that would be over time. Obviously, we just talked about that. The mortgage penalty to break it is typically lower. It's 3 months interest, which typically is about 1 to 1.5 months of payments. You can lock in the variable rate into a fixed at any time without breaking the mortgage. So I'm not trying to predict what the Bank of Canada is doing, because honestly, I don't even think they know what they're doing. So I'm not trying to be a bond trader and predict rates. Although we have clear indication that in 2022, they are going to raise rates. Is that going to be a quarter? Is that going to be a half? I mean, your guess is as good as mine. Yet I think we're probably going to see about 0.5% increase, which for me, that's still, I mean, my mortgage is going to go from 1.2 to 1.7%, which is still free money. I think in 2023, we are going to see a little bit of a higher. So I might consider going into a fixed rate product at that time. And I'll talk to you, if I do that, definitely I will make a video on that. Historically, again, there's a report from 2001 by Moshe Milevsky, and I probably butchered the name, but he's a professor of finance from the Schulich School of Business. Variable rate mortgage beats a 5-year fixed rate 90% of the time. He did update the numbers in 2008, but basically he was talking about on a $100,000 mortgage, over the course of that mortgage, you would save $22,000 in interest over the course of the loan. Whereas now, it's actually come down a little bit because the differences aren't as much, but it's still over $20,000. Over the course of the loan, you're going to save an interest that you're going to pay the bank, plus you're not going to have penalties, or the same penalties. All right, so let's run through the numbers real quick. So on a 5-year mortgage at 2.49%, it's a $300,000 mortgage at a 25-year amortization. And I understand $300,000 mortgage and the 2.49%, it's not really current. Yet, this is just an example. I understand you're going to have a $700,000 mortgage and your interest rates are going to be way lower because, again, I just got 1.2% on my variable. The difference of half a point, this is what happened. So your payment is $1,342 on the 5-year fixed. On a variable rate mortgage, your $300,000 mortgage at a 25-year amortization, exactly the same, is $1,270. So you're saving $72 per month. Now, if you are risk adverse, my recommendation would be to boost your payment $72 a month, so you are paying the same as that fixed rate mortgage. So what you're doing is right away, you are paying more money against your principal. So every month your interest payments are less and less and less, and every month you're paying more against the principal over that 5-year period. You're still gonna win. And even if you choose to go to a fixed rate product at some point, which in my mind, we're gonna look and see what 2022 does for us, and we're going to, make that prediction in 2023. Are we going to see a full rate, 1 point increase? Are we not? I mean, who knows? I think I've already said this. Yeah, I'm going to say it again. Even the Bank of Canada has no idea what interest rates are going to be in 2023. And again, I'm not a bond trader. I'm not a mortgage broker. I'm just a simple real estate agent and an investor who is basically trying to educate everyone and save people hundreds of thousands of dollars. Obviously, this is going to be a different dynamic between a homeowner and an investor. Because as an investor, I like to look at return on equity rather than ROE versus ROI. Return on equity, return on investment. The return on investment is my initial investment in that property. But as we've talked about a lot in this thing, and we hang out with these other investors who we have on the show, a lot of it is they are refinancing their properties to be able to have zero money in, or actually have that property pay them. And as we know, over the last couple of years, we've had a significant increase in the price of properties. Therefore, we're able to refinance these properties. If I had a fixed rate mortgage on these properties, I am paying a huge interest rate differentials, which we've went through, rather than a month or month and a half of payments to refinance the property. So that may not work out for me. I might not want to pay $20,000 to get out of a mortgage. I might just sit there and wait another year to do it, right? So as a real estate investor, the flexibility that a variable rate mortgage, not even just the cost savings, is worth its weight in gold. If you're a real estate investor and you're watching this video and you're taking fixed rate mortgages, I want you to comment down below and just let me know why. I honestly don't understand why any real estate investor right now would take a fixed rate mortgage, unless that's your only option because you're in B lenders. That I get. We all are all there, but even then, I like their variable product better. This is just me. I'm just putting that out there. If you're a homeowner, obviously through COVID, we've seen everything's changed, right? People are working from home. People have switched jobs. So there's been a lot more change to people's employment, to how people are working, how they're going to work long term. If we think that's going to continue in the future, as a homeowner to take a variable, it just gives you that much more flexibility. You know, if you're moving, you're refinancing to pull equity out to, you know, say, hey, contact Mark to start investing in real estate, or switching to a lower rate. You know, hey, family changes, right? Maybe you need to, you know, maybe you're like my friend Cam and you're having twins and they're going to be your fourth and fifth kids and you need to put an extension on the home. So now you need to refinance to pull out equity to go do stuff like that. You know, these are all things that happen. Cam, shout out to you, bud. Comment down below. 5 kids, man. Woo. Just going to put this out there. 90% of the time, people win with variable rate mortgages. So when is the time that you win with variable or fixed rate? So there was a time at the beginning of in 2020 that I actually said this might be a time to take fixed rate mortgages because, and I would take a year or two. I wouldn't take 5 because there was uncertainty, but the fixed rate products were sitting there at like 1 something, and you were getting variable rate mortgages at prime rate. They weren't doing prime minus anything. It was prime rate. I'm a very big fan of anything you can get prime -1. Anything more than that, I think it's just, you know, it's like candy to a baby. They're going to love it. I still think we're going to see low rates for 2022 and into 2023. I don't want to predict the time that it's going to, you know, that 10% of the time that fixed rate is going to be. I will comment on the channel. I think I did way back then when my early videos where the quality was crap and the sound was crap. I will let you know. Honestly, at the end of the day, I choose variable rate products because of the flexibility, also the cost savings. Like, I mean, so I choose the variable rate product, and I do use that on my personal residence and, you know, stuff that I can't write off for taxes other than using the Smith maneuver. I get it, everyone. Thank you. But if I have a mortgage on a principal residence, I use a variable rate product and I just up my payment to the difference between what my fixed rate would have been and my variable. And this helps me over time pay that mortgage off quicker. And typically I'm using a HELOC, again, for the Smith maneuver. And it allows me to go invest that money and have it now more tax efficient because I can write off the interest on that payment because I'm using it to invest. Anyways, that's a video we've already did that video, so we'll link it down below. This is what I'm doing personally on my real estate investment properties. I just use the variable rate term and I just let it ride out. Hopefully this is going to save you $20, $30, $100,000. Comment down below. Let me know. Definitely interested in hearing from you. Like and subscribe. Catch you guys in the next one.